Second reason for optimism, and this is more fundamental. Big companies, mid-sized companies are highly profitable, and their balance sheets are now very strong. If you pick any statistic, take any statistic you want, GDP, jobs, retail sales, industrial production, the level today is still well below the level that prevailed prior to the economic downturn, with one exception, corporate profits. Corporate profits are back all the way to where they were prior to the economic downturn. Businesses, you all have done a marvelous job of reducing your cost structures, raising productivity, getting those margins back up, and if you mix in a little bit of sales growth, you get some tremendous earnings growth. And we're now seeing 30, 40, even 50% kind of year-over-year growth rates in corporate earnings. Admittedly against easy comparisons, but nonetheless, that's about as good as it gets in the post-World War II period. And businesses' balance sheets are really in very good shape. Again, bigger companies and mid-sized companies. They've delevered with the low interest rates. Interest coverage ratios have been coming down. They're near record levels. Cash on balance sheets is now at record highs and going straight up. And some of it's overseas, in overseas bank accounts, but much of it is here in the United States. And it's across every single industry. It's no longer a question of can businesses expand. It really isn't. It's really a question of are they willing to expand? And that is a very important distinction, a very important distinction. And I do think as we make our way through the next year and we get to the end of next year, this time next year, if we don't get sideswiped by something, that confidence will begin to return and businesses will start to deploy their financial resources. They will begin to invest and hire more aggressively. And it's going to take just one CEO in each industry to decide that they cannot continue to grow earnings and maintain their stock price by cutting costs. They've done that. The only way to grow those earnings is to take a chance, go out and invest and hire. And once one CEO does it, I think all CEOs will quickly follow. That light switch will go on and we'll be off and running. Third reason for optimism. Third reason is that we are righting the wrongs that got us into this mess. I mean, most fundamentally, the problem we had was that households over-levered. They took on too much debt. Many of the loans that were made were bad loans, going back to my point about the foreclosure crisis, and it's been all about digesting those bad loans. Well, we're well along on our way. The deleveraging by households, the reduction in household debt has been really quite impressive. I talked about it in the context of credit cards, but in terms of dollar amounts, household liabilities have fallen by about $1 trillion over the past 2 years. That's just about 7–8%. That's really quite impressive. Debt service burdens, the proportion of after-tax income that households are devoting to making their principal and interest payments is falling very rapidly, and if the rate of deleveraging that has occurred over the past year continues on for the coming year and interest rates remain about where they are, which seems like a pretty good bet, the debt service burden is going to be at a record low this time next year, and I think that will mark the end of the deleveraging process, and that significant weight on consumer spending will begin to lift, and consumers will begin to spend with a little bit more aggressiveness and also another source of support. A fourth reason for optimism. The level of economic activity is incredibly low relative to any measure of demographics. Let me illustrate that point in the context of the vehicle market. Vehicle sales nationwide currently are running about 11.5 million units annualized. Demographics would argue, just looking at the size of the population, the age composition of the population, the wealth and income of the population, would suggest that we should be selling 15.5 million units per annum. So we're at 11.5, we should be at 15.5. People are putting off purchases that they would normally make given their demographic situation. They can only do that for so long. At some point, when there's a little bit of credit and a little bit of jobs, they're going to unleash that so-called pent-up demand, and we're going to see sales go from 11.5 million units to 15.5 million, and then something beyond that to make up for that pent-up demand. And that's all probably going to happen in 2012 and 13. And that statistic, 11.5 to 15.5, is a tremendous amount of economic activity. And I'm using that as an example. This same dynamic and principle applies to lots of different industries, including the housing industry. So point number 4 is, I think if we're able to make, point number 3 is, if we're able to make it through the next 6, 9 months, 12 months without getting sideswiped again. And again, the odds are that we will be able to do this with a little bit of help from the Federal Reserve. We're going to be in a much better place a year from now, and certainly 2 years from now. How are you feeling now? A little bit better. I might have taken you down too low. I'm sorry about that. Let me end on point number 4. And that is, if my, let's call it optimistic perspective on the outlook is to come to pass, a number of different working assumptions have to hold. And I'll just mention 2. The first is that we have to continue to make a reasonably graceful transition from an economy that's led by consumers to an economy that's led by exports and business investment. So that means you all need to be looking outside our borders for growth opportunity. This process is already underway. I mentioned it in the context of saving. The saving rate has risen quite considerably over the past couple, 3 years, and it will continue to rise. And I think we're up to this challenge. I think we will export a lot of the things we already do because we're really good at them. Aerospace, machine tools, sophisticated instrumentation, pharmaceuticals, other kinds of materials, agricultural products, processed foods. But we're also going to begin to export things that we don't really export, but we really do quite well. Services, accounting services, legal services, management consulting services, educational services, engineering services, architectural services, economic consulting services. We need a lot more Lady Gagas. These services embody what is our nation's comparative advantage. What is that? It's our highly skilled and educated workforce, and nowhere is that most obvious in the state of Connecticut. And we just need to, and we've been doing services for a long time. Did I fail to mention financial services? That was not intentional, financial services. We made a mess, but we generally do financial services very efficiently, and we will continue to do that efficiently for the rest of the world. But we've been doing these things for many years. We've got a big head start. They embody highly skilled and educated workers. That's our comparative advantage, and that's where the growth opportunities are going to come. But this is a working assumption. We need to see this graceful transition occur between a consumer-led to an export-led economy. Finally, I'm going to just end with there are a number of working assumptions, but one final working assumption. And that is that we are going to address, does anyone know what the final working assumption is? It's pretty obvious. We've got to address our fiscal situation, right? That's pretty clear. And you're going to say, you're thinking to yourself, oh, we're doomed. We're doomed. We're toast. We're toast. But I think just the opposite. I think, and you know what? The rest of the world thinks just the opposite. I mean, we're selling 10-year Treasury bonds at 2.5%. Now, of course, the Federal Reserve has the investors back, but even if the Fed wasn't in the marketplace, interest rates are very low. If there's a problem anywhere on the planet, including here in the United States, global investors come to invest in the United States because they know when push comes to shove, we always figure out what to do and we do it, right? We always do. We've done it from the beginning of our economic history, the country's history. And everyone has confidence that we will do it, except perhaps ourselves. But I think we will be able to get it together. Our problems aren't quite as daunting as you think they are. The math is difficult, but it isn't overwhelming. And there are some things, pretty straightforward things that we can do, both on the spending side and on the tax side, to get it together and make sure that my optimistic outlook for the U.S. economy comes to pass. How's that for a high note? All right,